Goodness me. Hi, guys. Thank you for joining me for Trading Buddies on this Monday, the 20th of the 5th. Apologies for the slow start. I was getting weird signals on the screen telling me that I was actually in the next YouTube picture, that countdown coming from YouTube. I hope you weren't seeing, well, it doesn't matter if you're seeing it or not. Just a little bit unprofessional. How's your weekend? Hope it's been wonderful. Mine was terrible. I had a very, very bad fever since about Thursday, which is why those of you who are in the Telegram group would have been wondering where I was. That's where I was in bed, flat on my back, not very well at all. Anyway, that was last week, hopefully, and that's gone thanks to antibiotics. And now I'm back on my feet and raring to go. Hope you are too, and I hope your weekend was far better than what mine was. Righto, let's have a look and see what's about the place. I'm not sure where, because I got sick last week, where you guys were in terms of, whoa, my control panel's just gone again. There we are. Where you guys were in terms of the trades that I left you with last week. So if anybody wants to know the results of those, you probably already do. Please feel free to ask and I'll try and get through them. There were a few, but last week, I don't know whether you guys were in all of them, so I don't know which were the winners and which were the break-evens. No losers, but there were quite a few trades went through. Okay, first things first, as always, let's look at the gold chart and see if we've got a breakout trade on our hands today. We've got the low of the range right here, and we've got the high of the range right here. And we're currently not too far away from the middle. I like that bit. Do I like the rest of it? Our risk is going to be entry there for the long, stop loss there, about $34. And our potential reward to the high side will be about $27, $28. That's not too bad. But to the low side, even if we were to dismiss the daily pivot and go to the weekly pivot, it's only 25 pips. Yeah. I don't know. What do you think, guys? I don't think it's worth it on a Monday. If you look at the, and here's the thing, right? If you look at the ATR, now I don't know if you guys do this as a rule, but I think it's a really good thing to do. Hello, Samsung SMS916B. I don't know who that is. But g'day. Thanks for saying g'day. It's Lewis. How are you, mate? I don't know if this is really worth it, but anyway, let's have a shot and see what we can find. ATR wise, that's what I want to have a look at. So if we have a look at the indicators and we go to a thing called average true range, indeed, Lewis, probably not. Average true range on a daily chart we must find, not on an hourly chart. So let's try that again. Indicators, average true range. And let's go back, say, I don't know, months, 20 days, shall we? And put Dodger Blue. Dodger Blue's okay. And there's the ATR. It's coming down. And it is currently at $35. So what we're really saying here is we're looking for a breakout that's going to go the same distance as the move has already been made today, outside of where we are. So that means a range of 70 pips today. Do we want that? I don't think we want that trade. Will it take us in and then take 2 days to get there? Maybe. Is that the whole idea? No. So I'm not going to do that. Let's leave it at that. Mondays are a pretty ordinary day to trade this particular strategy. I think it tends to work better during the week. Righto. So let's go and have a look and see what I'm about this week thus far. I'll start with the game changer bars because there aren't too many of them. I'll go through them this week. So we're looking at the weekly chart and we're looking for a bar or candle. I keep calling them bars because bars are easier to say than candle. That'll do, won't it? And last week we had a game changer bar. Now, what is a game changer bar? For those of you who don't know, a game changer bar is my definition of a key reversal bar. What is a key reversal bar? Well, you can go to Google. I think you'll find a 1,000 definitions of it. What be pretty much the same definition, but there'll be 1,000 people who want to tell you what a key reversal bar is. Essentially, it is a candle or bar who's, in this case, going up or in a long fashion. It's changing from a low that is lower than the previous bar or candle. In this case, we're on the weekly chart. So low is lower than the previous, and it closed on or near its high. Simple as that. Lower low than the previous, on or near its high. If it was a game changer bar to the downside, it would have a high higher than the previous bar, and it closed on or near its low. That's the simple definition of a key reversal bar that I always change the terminology of things because I like to brand them my own. It's not my own, but game changer is how I prefer to call them. This one's a really interesting one for a couple of reasons. We've got a big double bottom sitting here. We've got a higher high. We've got a higher low. Then we've got a lower high. Then we've got a higher low. And now we've got a higher high. So this could very, very easily continue, and I don't have a problem with that. What I find very interesting is that this is a breakout of this level, and a substantial one because it's closed near its high. I'll give you an example of what I'm about to tell you in a minute that I am trading. I'm not trading this one because it is very much a case of potential reversal continuation, if that makes sense. Reversal down here, continue the reversal. Sorry if I confused you with that. So when that's the case, when I break out of a level, I'd like to see one of two things happen. One, the continuation straight away. But if that doesn't happen, then a pullback to the level so I can actually trade that way. However, if this happens to be a false break, and don't forget most breakouts are false, then the people who bought here are going to be wrong when price comes back to here. Therefore, an entry underneath that bar short also makes sense. I don't think in this case it's a good trade because of the potential reversal. So I'm leaving this one alone for that reason. Not only for that reason, I don't think the reward to risk is great on it anyway. Swissy versus the yen is our second game changer bar for the week. Tiny one. Don't mind these. And if you have a look at 2 weeks ago or 3 weeks ago now, there was this big game changer bar to the downside. Now, the next thing I'm going to tell you about game changer bars, if you don't know, is they have to have context, like most things have to have context when you're trading. This is no different. And the context here couldn't be any more stark, in my humble opinion. The context that I use to consider whether I'm going to take a game changer bar trade is it has to agree with not necessarily the trend, but the overall market appearance, if I can put it that way. What's actually dominating the market is really what I'm asking myself. What is driving this market from a very long-term point of view? And at this point in time, I would have to say that driver, I'll go a little bit wider, that driver is probably this triple bottom down here. Because since we saw that, nothing has changed the direction. Absolutely nothing. We are being up, we have been up. Big retracement here, of course. But that's still driving the market. What changes that? Well, something like that up here changes that. But until that changes, it's very, very difficult to say, all right, instant reversal. Very difficult to say that. And you'll get caught. Well, you can get caught. Okay, instant reversal. Let's start here. Instant reversal here. Sorry. Instant reversal here. You got away with that one. You got some money in the bank. Instant reversal here. Sorry. Instant reversal here. Sorry. That's just the potential when a market is trending as strongly as this one is. That's how hard it is to actually get some money, some substantial money. But when this does reverse, happy days. We could be back down here, who knows when, in what time frame. And that, of course, is what I'm always trying to catch, one of those. But I have to see a couple of things first. I have to see a reversal bar, or I have to see a reversal pattern, like a double top, head and shoulders, shooting star, something like that, evening star, followed by a confirmation. This one has the potential to be all of those or both of those things. If I look at it on the daily chart, I can probably talk myself into thinking, okay, this has now come back underneath that breakout level, and it has retested it with a reversal bar here on the daily chart. But it's also got a reversal bar here on the daily chart the day before. So to me, it's completely confusing, and I don't know whether this is ready to go yet or not. Is it worth the risk is the big question. The potential reward is absolutely substantial if you get this right and can stay in the trade. With the risk of that much, I'm talking myself into this, with a risk of that much, say 200 pips, you could net yourself anything, really, if you could stay in the trade. If it were to come back to here even, you'd get a substantial win. To here, you'd get a substantial win. And to reverse completely and take that out, you may be 2 years older, but that's the potential for this ultimately. Would I take it? Like I said, I'm not convinced that that's the case. The trade setup is not perfect for me. They probably are seldom perfect when they're reversing, but when they are and do, happy days. I I don't like that it's sitting on the monthly pivot. I do like that it's a game changer bar, but getting back to my point, I don't take these unless they fit the criteria. So the criteria is not met, move on. I don't take the trade. But gee whiz, I'm nearly talking myself into dollar Swissy is the last one. And dollar Swissy, we traded this last week. I think we traded this in the show, I'm not sure, because it was a game changer bar followed by an inside bar. Now that's what I call a game changer plus bar. So higher than the previous week, closed near its low, then we got the inside bar. We got TP1, but that's all the market would give us. And we moved our stop to break even, not break even, to where we would close at break even, which is what I did. And that finished up a break even trade. It's also a game changer bar this week, suggesting that we buy straight into the monthly pivot, almost a double inside bar off a game changer bar at resistance. Not for me, thank you. No, I won't be buying that one, that's for sure. What I would consider doing, however, is probably selling it if we got another lower high in here. So I'll be watching that throughout the week on the daily chart. What I am interested in this week, and I'll give you two trades, which tend to be counterintuitive to some degree, but that's not unlike me. I'll give you the other two that are on my watch list first. The first is Euro Aussie. Euro Aussie was on my watch list last week, and I can't even remember why I didn't take the trade, but I didn't. I was probably to do with an untested monthly pivot and a very, very tight support level. But that was looking very, very nice as a break and retest of that trade line. Didn't take the trade, and it wouldn't have triggered in any case. It may well today, it may well this week. Do I want to take the trade? Not just yet, because we've got Aussie news tomorrow, I think. I'll wait on that one. I think that was the reason last week we waited on the Aussie news, and the Aussie news worked well for some and not for others. So Euro Aussie is definitely on my watch list, watching that on a daily chart. The other that I'm watching is Euro Kiwi. Now, I liked this last week as well, because it was a game changer bar followed by an inside bar. I'll take you back. Game changer bar, inside bar. That's what we traded on dollar Swissy, right? So we chose that one over Euro Kiwi. Guess what? We got the wrong one. But I am expecting to have another look at this if we do get a retracement, looking like we're going to get that. If we retested here, that would be nice to look for an entry short on Euro Kiwi. I have placed two orders. One is good old CAD Swiss. I think I probably pointed this one out to you last week, and nothing's changed. I've just replaced the order. The order expires on the end of the week, but I have replaced the order. If you wanted to follow it, it's the same setup. We do have, you call it inverted head and shoulders if you want. It's very loosely that. What it really is a potential reversal, not yet proven. And we do have higher highs and lows, and we're waiting for that next higher high. I like this bar here, and that was one of the reasons I took the trade, because this is very reminiscent of what's going on. Bounce, bounce. Thinking about it. Hasn't quite bounced yet, but I do like it, and I have replaced it. Or if you wanted to follow it, it's 0.6707 is the entry. Stop loss is 182 pips. My memory serves me correctly, or my brain does. That equals 0.68. What am I up to? 688. Is that right? That can't be right. 6825. There you go. Maths is not working. It must have been those antibiotics I was on over the weekend. Stop loss. That's why I couldn't work it out, because I was going up instead of down. That was the stop loss. 0.6525 is the stop loss, sorry. And the take profit level, my first take profit level, is at 0.6825. Why don't I just do that instead of trying to work it out? Because I like to keep my brain active, you see. The other one, which is a little bit the reverse of that, is, remember I was speaking to you earlier about trading false breaks. This is one that I am willing to trade, because I think if I'm wrong here, there's no chance in hell that I'll get taken into the trade. That may not be the case, but that's what I'm speculating on. This one here is a very, very strong weekly candle, without question. On the daily, that level that's been broken is pretty clear to me also. It's been resistance, support, resistance, failed resistance, 1, 2, 3, 4, and now broken. So my contention would be that price is very likely to continue higher. But in my world, if that does not happen, then potentially the opposite of that will happen. And if that's the case, all of this hard work may well get frittered away. And if you look at the chart here on the monthly, wow, where's the pullback? Is this a short covering rally? It's a lengthy one, I've got to say, if that's the case. But that's what I'm seeing. So potential for this to go back to trend, in my opinion, is not too bad as a false break of that level. So on the daily chart, I'm trading this candle as a false break. I'm going to be a little bit conservative and take my first profit here at this former breakout level, I suppose. So here's the entry, 0.9828 is my entry there. My stop loss, of course, we're going short, is 0.9888. And my first take profit will be at 0.98000. They're the two trades that I'm liking. I went through the currency indices or indexes and found it hard to be bullish on anything, frankly. I'm a little bit bullish the Aussie still. I think the Swissie's got a hope today or this week. And the shunned pound, I also thought had an opportunity. I'll very, very quickly show you those. That's not where we want to be. Currencies. Pound, because I thought it had, that's the daily chart. On the weekly chart, I thought it had got through resistance. Let me rack that back. That resistance I'm talking about is probably this level here. It's not super strong, but it looks like over the last couple of weeks, rallied, put in a higher low, and I think it's destined for here to this trade line. So I still think that's got a little bit left in it, this rally on the pound. The dollar was really uninteresting to me, if I'm honest, and that's because it's kind of played out what I anticipated would happen when we spoke about this false break a few weeks ago. Didn't quite reach the bottom, but it's sitting on a former resistance level, which should operate as support, but I'm not sure for how long. We're getting very, very close to the edge of that, or the pointy end of that triangle. I was going to be a little bit bullish to CAD, but I still think this is destined for here, but I'm just not sure yet, because or the flip of what I've just shown you on the pound, it's at a resistance, former support level. So I'm not sure how much this has got in it at the moment or where it's going to head. The Swissy can't get into this channel, can't get back into this channel. I had a little bit of a soft spot for it though, given that it also can't go back beyond this former resistance and support level here as well. So I repeat, I haven't got a lot of confidence in the currencies at all this week from a directional bias point of view. The euro I thought was a sell because it was at this trend line resistance. But again, we're getting towards the pointy end, so we're getting towards breakout areas as well. So I suppose if I boil it down, I've probably got the Aussie a little bit bullish, pound a little bit bullish, Swissy maybe, and CAD maybe. But euro, probably on the seller of the euro. That's kind of where I'm at. I haven't got any screens up here that tell me that. I actually see him. Here he is. I can't see him.
Hi, mate.
Why can't I see you?
I don't know. I've been here a while.
I can't see anybody, including me. I can see the control panel, but there's no pictures in it. That's a bit weird. Maybe I've got the wrong. Here we are. Here we are. Now I'm back. How you going, mate?
Yeah, doing all right. Doing all right. Interesting to sort of hear your trepidation, I think, about the markets this week, because I think, looking at the data, it sort of does suggest that we could be on a bit of a turning point.
Okay.
I think one of the most fascinating data releases this week is probably pound CPI, and I don't know if you've looked at any of the releases this week, but let me show you something. This is quite interesting, and this is going to pose a question on how we decipher which side of this market we go on. Let me share this. So here's our economic calendar. Now we got a couple of things. So we got on Tuesday, there is CPI data from Canada. But I think a bigger one is, well, in fact, let's have a quick look at what they're sort of suggesting. Actually, they're not giving us anything on the way of a prediction here on the CPI data. But
I
when we
got
go
that
down
wrong.
to
I
the
said it was Aussie news tomorrow. It's CAD. Right. Okay.
arcade, yeah. Look at this though, mate. I mean, I think this is a really interesting forecast. Look at this,
Ooh, yeah.
pound
Well,
CPI data. They're looking for it to drop from 3.2% to 2.1%. Now, the calculations
mm,
I've done, it kind of gets to 2.3 to 2.5%. So I don't think it gets quite as low as that. We'll have a look at something else that sort of indicates a little bit about the CPI in a moment. But the question really is, 2% is the target for central banks kind of globally, and we know that. So if 2% is the target, but they miss the forecast, so let's say they get to 2.3. Now that's still, a huge drop. There's almost a 1% drop in CPI data from 3.2 to 2.3. If they get down to 2.3%, but they miss the forecast, is that bullish pound or is that bearish pound?
good question.
I would suggest that, of course, it's bearish pound ultimately, but the initial reaction may not,
Yeah.
provide a bearish move. I don't know where they're getting 2.1%. I mean, that's a huge drop. And I'll show you why I think that they're going to get close to 2%. If we look back at look at this on the monthly data on the CPI. If we go all the way back, so this is year on year, these are month on month. We go all the way back to this number here. No, sorry, not that number there. This number here. This one here. 1.2%. That was back in May 2023. Now, if you look at the rest of them, they're down, they're up, they're down, but notably, they're well under this number, well under the number. If you see this, then the next highest drop is 0.7. So 1.2 to 0.7, you're looking at a 0.5% drop just there alone. Now, if you look at this number and realize that that's May 23, that means that number will drop out of the year-on-year calculations. So a 1.2% dropping out of the year-on-year calculations drives it, if you take the whole number out, from 3.2 down to 2%. Now, you've got to add this May when you take that one out. So if you add the rest of them up, you're going to get 11 months of data. 11 months of data minus the 1.2% gets us to 2%. So I don't know how they're getting 2.1%, because that's suggesting that the inflation this month was only 1%, or in April was only 0.1%. Now that's unlikely. This is why I think it's more likely to be 2.3, maybe 2.5% inflation.
Yeah.
And this is, sense. Yeah. But it makes it very difficult. It makes it very tricky to ascertain what then happens to the pound, because of course the main driver of currency movement is interest rates, and the Bank of England, of course, like everybody else, are trying to kind of grapple with, when can we lower interest rates? I don't think we're ever going to go back to, well, not ever. I don't think we're going to go back to the 0 interest rate environment or 0.5 interest rate environment. But I think something sitting around about interest rates around about 3%, maybe 4%, something like that is more than palatable. Now, currently, the pound sits, a whole 1, maybe 2 percentage points above that, depending on what your eventual target is. And if we come down here, we can see where they are, I think. Oh, maybe it's up higher. Here we go. This is where the pound sits, 5.25%. So the likelihood that we get a drop after this number is high, regardless of what the number is, unless it's, a north of 2.5. I think if it's anything less than 2.5, which I think it probably will be, that suggests that they're going to lower interest rates. But this is back to the original question. What if they get to 2.3, miss forecast, but still point to an interest rate reduction, which is kind of what that suggests. That's the first thing to take into consideration. The second thing to take into consideration is what's driving the lower CPI data. And we don't have a whole basket of things that we can look at on MT4, but one thing we do have on MT4, of course, is the price of oil. And if we look at oil over the course of that same period, back in May 2023, interestingly, well, it's actually April because they're looking at the April number. But either way, we're basically looking at the same price. You know, we had this spike up,
Yep.
we've had the move down, so we're looking at the same price of oil. Now that does suggest that that the number is going to be, you know, relatively low because of course all these spikes have been happening, and yet CPI data has been reducing. So when we sort of like see the price of oil also coming down, and you know, you'd want to look at that and natural gas as well, of course, which is here. Same deal. You know, natural gas is pretty much the same price it was a year ago. But we had these spikes, we've had the moves down, and this is where we kind of currently sit. But massive reduction from here. Now, what's one of the interesting things is now, of course, there's an election coming up over here very, very soon, and Rishi Sunak, his timing was impeccable. Rishi Sunak, after that 1.2% inflation that I showed you back in May, after that said, I will pledge to bring inflation down to, you know, lower. His timing was impeccable. So he's got a spike in inflation, and the next sort of time round, he's sort of saying that it's going to come down. Well, of course, it's going to come down from there. I mean, it's, you know, somebody analysed it. I saw yesterday saying it's like, you know, me coming and punching you in the face, and you getting a black eye, and me saying, I will make sure that your bruising goes down in the next 2 weeks. Well, that just happens naturally,
Awesome.
you know. So, so the point is that we're seeing natural gas, you know, near prices from last year. We're seeing WTI near prices from last year. Inflation dropping in the UK, but also that brings us back to just about every other currency around, which is why I find your trepidation this week, you know, quite interesting. Because are we at a turning point? You know, all of these central banks are under pressure to lower interest rates. Interest rates are probably restrictively too high. We're seeing a reduction in GDP. We're seeing a reduction in the labor market. So they're restrictively too high. Doesn't mean they're going to drop significantly, but it does suggest they're going to drop. Now, if the euro decides to come down, the pound decides to come down, and then, you know, the United States decide to come down, what is the currency really that we're looking at to say, okay, well, is this going to be a uniform reduction in interest rates, and it's going to be very difficult to get something? Are we trading are we trading really the first movers kind of every time, or the next mover every time? Or are we looking at something bigger than that? Are we looking at saying, what does this do to the gold market? Are we saying, what does this do to the yen? Because of course the yen is the Japanese economy is different because the currency value is so low that they're importing inflation all the time, and actually their inflation is going in the opposite direction, and they are you know, showing a keenness to intervene in the currency because it's so cheap. So that really kind of puts my kind of thinking, you know, on in those kind of areas, you know, and really sort of as traders from here on in, we've got to figure out how we're going to try and play this, because inflation is going to drop to 2%. You know, it's or it's going to drop to a restrictive, a low enough level to suggest there will be rate cuts imminent. You know, we were sort of thinking about rate cuts at the start of the year and last year, and you know, there's always calls for it, but there was no way. You know, inflation was too high. But it looks like those big numbers that we saw a year ago are really dropping out. You know, they are starting to drop out. So now we've got to figure out how we're going to play it, which, you know, I think poses another question. And it's not really I'm not making a trade suggestion here at all. The one suggestion I would have is that equities do very, very well out of the back of this. Trading the FTSE 100 this week, very, very difficult. You know, if this comes down to the monthly pivot, we're all over this. But this needs to drop by 6% before Wednesday. I mean, I don't know what's going to drive it down there, but it's extremely yeah, I mean, it's unlikely. You know, even the gap here would be attractive, but even that is around about a 3% move to the downside. So it's going to be difficult to kind of find something that is number one, a good idea, and number two, the right price. you know, at these current levels, because a lot of this has been traded. And again, mate, we're back to the question. If UK inflation comes in at 2.3%, does the FTSE actually come down because it misses forecast? You know, and if it does, it's a buy. You know, it's a buy all over, and that might be what we need to wait for. I don't know whether we can trade the pound before, because the anticipation of a drop in inflation is obvious. Everybody's sort of saying it, and it's obvious why we're going to get a drop in inflation. The problem that we've got is, how does the market react to a miss in inflation, because they've lowballed the number so drastically that there's very, very likely to be a miss. Buying it, dangerous because of the drop in inflation. Selling it, dangerous because the forecast might be the thing that people play. So therefore, we might be waiting on the inflation number, waiting on the reaction, and then picking things up. And picking things up would be selling pound, buying FTSE, as an example, you know, as a call. But the price has to be there, and we're almost wanting it to miss forecast by not too much, maybe 2.3%. The FTSE sells off, the pound buys up because they miss forecast, but then the dust settles and the heads clear, and they go, but hold on, actually that's really close to 2%. The next move is probably going to be an interest rate cut. Let's sell the pound and buy the FTSE. So that's really my thinking this week.
That kind of fits with the chart that I showed you on the pound index.
Oh, okay.
It is well and truly on its way to what I call target, which is the top of our triangle that we've got in place, which is a resistance trend line at the end of the day. So if it hits that,
is it the same as the pound dollar?
Yes, very, very close.
Oh, mate, well, this would be ideal. So the pound is a sell at 1.280. You know, 1.2800 is the pound is a sell, and that's the other way, of course, that I would play it. If this gets up here in the next 2 days before the inflation number comes out, I'm selling this off. I suppose if it gets up after the number as well, I'd sell it off. So yeah, I think that's a really, really sensible way that we're going to try and play this. Actually, what we're going to try and do is hit target. Or resistance and support, depending on which way you look at it, and then try and get into a position in the opposite direction, because the pound's, you know, it's going to be very difficult to see the pound as a buy. It's a sell. It's a sell this week, and it would, you know, showing you those numbers, I think it would take a very brave person to say, nah, you know, the next number will be high. We've seen 1.2%. It is an extreme, and we're talking about the extreme of the year. But that figure is about to drop out of the calculations. So you know, it's going to take somebody very brave to say, no, that it'll still be pushing 3%. Very unlikely, very, very unlikely. You can't say anything for sure, of course, but it's very unlikely. We've seen the oil come down. We've seen natural gas come down. We've seen all these sort of other things that we can look at that, you know, actually reduce in price over the course of the last 6 months, and it's very unlikely that we get a high ball number here. You know, even if we get an average number, which would be, you know, near the kind of like a 0.3 to 0.5 range, it still drops inflation significantly down to between 2 and 2.5%. So the pound's a sell.
But I like that. I like the plan.
Yeah. So that's what we're going to look at, mate. What you then choose it against. This is the challenge. If the pound is your sell, what do you sell it against? Because this inflation narrative is now going to, as I said before, it's going to spill in everywhere. So do you trade it against the yen because they are actually, you know, monetary policy is moving slightly in the opposite direction? Well, it is moving in the opposite direction. Do you trade it against the yen at the cost of swaps, at the cost of timing, at the cost of having the weakest currency on the board historically over the last 10 years? Do you trade it against the euro that is not quite as, I suppose, disinflationary, but also has the same narrative coming from their central bank? Do you trade it against the dollar? The same thing, the same narrative coming from their central bank? Or do you choose something that I think that you've flagged up, something like the Aussie or the CAD, because they are the stronger economies kind of going into into the situation. So I think picking the pound on one side is fine, but the challenge is going to be, what's your other currency?
Well,
Do you trade it? What gold, mate? I mean, geez, what happens to gold in a? I mean, you look at the gold chart. This is the other thing that I found quite interesting. Sorry, mate, I didn't even give you a chance to answer there. But
you're
you
right.
could
Well,
change.
I was
You
just
could,
going to add the key with the other Comdol. That's all, because it had a great
yes,
week
yes,
this week.
yeah. Well, the Kiwi flew last week. You know, it was the strongest currency, and it's an interesting one. And actually, seasonally, it's the seasonally the best two. Just to kind of give it maybe sort of some idea, is the Swissy and the Kiwi. They're the two seasonally that you know are on the radar this week. So you could trade pound Swiss, pound Kiwi. So you know, thanks for reminding me of those actually, because these are a potential option. So pound Swiss is it at resistance? Yes, it is. Bang on. You know, it's in and around. I'm looking at weekly charts here as well. So this is a long-term play of resistance here, right on top of this area here. And this is, I mean, I don't even know what we're going to call this pattern, but it's definitely a box that we're seeing here. So we're in this box here, coming down. And you're probably looking at, reselect it. You're looking at that as a potential box range, and then this is really sort of like where we are. We're right at the top end of the box.
Yep.
So you could trade the box. So the pound Swissy looks like a good shout. I think the pound Kiwi fundamentally makes a lot more sense than the pound Kiwi. So pound Swissy, sorry. And this with a little bit of retracement and along this horizontal level at 2.05. Well, call it 2.086. That would be an attractive sell as well.
Yeah, I agree with that one.
So,
Yep.
so we could go with both of those, or either of them, I should say. Now, the other question is, what happens to gold in a deflationary environment? And we know that gold is our inflation play. What happens to the gold? What do people do with gold? You know, from here on in. Now, there is global tensions that means that gold is a great asset to hold, but the price is extended, and we need a better price if we're going to buy this thing. But of course, there's always the risk that you miss the trade. But it's one of those that you sort of look at and think might have to. You know, you might just have to ignore it. There are probably other things that you could do to protect yourself in a you know, with global tensions and everything else, that are just more attractive. That's gold. Look at silver. You know, it's just gone. I mean, of course, silver's a much more volatile instrument, but look at it. I mean, it's just, you know, it's taken out the highs and it's extended. So can't trade these two. But again, mate, what happens to gold in a disinflationary environment? Do we see actually gold sell off a little bit?
Well, it's got to. It's too hot, I
Yeah,
believe.
yeah,
Trading it, gee whiz, that's a
yeah.
tough call. It's a tough call to put a
Well, you'd
sell
want to
on
buy it,
gold.
wouldn't you? You wouldn't trade the downside, would you?
Oh, well, I wouldn't. No.
No.
What I would like to see is I had more dug underneath the ground. That'd be nice. So yes,
Yeah.
as an investment, I think it makes sense to buy it. As a trade, it doesn't make sense to do anything right now.
No. Well,
I don't.
Lewis
I
is
don't
probably
believe
better
him.
equipped than us. Lewis is Lewis is saying yeah, but not now. He's a bit of a gold bug, and he's probably a lot more proficient at trading gold than we both are. And
Yeah,
he's saying
for
he's not
sure.
doing anything either yet. So maybe we leave this one be. But I do think it's an interesting discussion on you know, what happens to the price of gold with a disinflationary environment. I mean, it might not move instantly, but you see some disinflation, maybe even deflation. I don't know if that would happen, but maybe sort of, you know, some disinflation happens, and some global tensions lift. That would bring the price of gold down. That's the kind of recipe that you need really to bring this price down. But I think an interesting week, mate. You know, say the pound looks the one to sell, but you got to get the right price.
Yeah, look, very, very unusual for me not to have an opinion, a strong opinion on at least one currency.
Yeah,
And I just haven't, really haven't. I'm
yeah.
normally a dollar buyer or seller, but I'm neither. like I said, I'm a little bit still bullish the Aussie, but only for a short period. I don't think it's a long period trade. Kiwi was strong last week. Like to see some pullback on that. Swissy, it just can't break back above that channel that I've got in place. It's tried and tried and tried, but it just can't. I don't know. The yen,
If the global, I know you don't like the yen. I know I know the yen is just really, it's just not a play for you at all. But if you kind of like put your kind of objective hat on and just think about sort of like, where currencies are. Look at that. I mean, that is so close on gold. That's going back from 2013. That's suggesting that we are at resistance, in and around resistance for gold. If you put your objective hat on and think, okay, the global picture is about to flip. We're not now in sort of high inflation. We're now in disinflation for sure. So we got sort of like inflation starting to ease back, and that means central banks will ease back. With your objective hat on, forgetting the price, forgetting the past experience, would you think that would push us towards finally saying that the yen is going to get some upside, not extended, but some upside for a period?
Yeah, I mean that all makes perfect sense, and I've been trying my heart out to find a technical reason to go along with that narrative.
Yeah.
Yet I'm struggling with it. But
I'll tell you what.
That it has come off the bottom of my descending channel on the weekly chart, and we are now at a potential higher low point.
Yeah, I mean, look at this on the technically. You like this technically? I mean, this is the dollar yen. Yep. Touch, a monthly pivot, lower high. We had a lower low break in this down here, lower high here. Don't like the look of that.
Don't like is that the weekly?
That's the daily.
That's the daily.
Yeah.
I'd like the look of it if it broke that trend line, but didn't take out the lower high.
Didn't take that out. So break of the trend line, maybe sort of stuck around the monthly pivot. Then you've got a bar to trade underneath.
Yep.
Yeah. I concur. I mean, if you look at the pound, because we've been talking about the pound, double top. And this is tricky because you've got this sort of wild swing here. But ultimately, if we're using these closing prices, which are much more reliable, this is a double top.
Yep.
And I'm sure if we bring in an RSI as an oscillator, what we get here, that'll do, is divergence. Because the double top is definitely the weakness of this move is evident. There's nowhere near as much velocity in this move as there was in this move here. This move here, so there is sort of like a lack of velocity here. We might see a triple top and another drop in momentum, but there are some signals, but they're not strong enough for you. I presume is what you're saying.
Well, it's only because of my doggedness, or maybe call it stubbornness, that I need to have a setup.
Yeah.
And I've tried to brainwash myself out of that for a long time. And I think when I do come back to full-time trading, I'll work on that very, very hard. In fact, I might even go and see a psychologist who we met in Bali, perhaps, and have a good look at that. Swissy yen, I had a look at. Ash, did you have a look at Swissy yen?
I didn't because they are
because you're set on the pound, and I get that.
Well, not only am I set on the pound, but I quite like the Swissy for a long, and I quite like the yen for a long, if I'm honest. I mean, it's, I'm finding this tricky. I think I like the dollar Swiss as a short. I like the Swissy mainly because of the seasonal part, not because I haven't looked at the charts of the Swissy, but mainly because of the seasonal bias that I'm sort of getting from the Swissy, because I don't have a lot. When it comes down to sort of like information to do with what we're going to trade, the fundamentals are saying we're about to get interest rate cuts, like imminently. Now, if that's across the board, what do you then trade? Well, the next thing down is your COT data, and then the next thing down is your seasonal data. So the seasonal data is the only thing which is giving us a really strong signal, and that's in long Swissy and long Kiwi.
Just 2 seconds.
But the fundamentals, fundamentals suggest long yen. Sorry, mate, go on.
No, you're right. I'm going to show you euro dollar in a minute because there could be a trade in 15 minutes time. But
cool.
I'll show you just because I don't want to surprise anyone with it. But yeah, Swissy yen, I thought last week's bar, which is a game changer bar. In fact, I don't know if you were listening to me earlier. I nearly talked myself into placing the trade. I still might. Is that Swissy yen you've got up there? No,
yeah.
It can't be. Really?
Yeah, on the daily.
Okay. Yeah, that's what threw me. Because have you got a low test, high test? I can't see your chart properly.
Let me see. There's a low test there, high test, current. Low test, high test. Yeah.
Okay. Yeah, that's what I call the prickly pear, and I don't trade it. But the weekly is far more interesting because if you go to the weekly,
that suggests some downside with the Swissy yen.
Yep, that's a potential lower high, and the reward to risk is incredibly impressive. So
look through these yen pairs now.
But I'm like you.
Yeah.
I was a little bit prepared to give the Swissy one more shot at getting into my rising channel.
Yeah,
but I do like that setup.
Yeah. The Swissy is a really interesting currency because we've seen the Swissy strengthen, and the only currency that strengthened, this is the CAD Swiss, it was strengthening when everybody else was raising interest rates at a much faster pace than Switzerland, and then we sort of see a change of direction from Switzerland actually to the downside. They actually sort of lowered interest rates, and yet we're still kind of popping in and around this area. And what happens when everybody else kind of goes back towards them? This is effectively fair value after the Swissy drop their interest rate. What happens when everybody else drops their interest rate? Do we see another dip down? Are we ready to kind of break through this downward sloping channel? It's just it's a really interesting one.
Yeah, you just reminded me why I didn't trade Swissy yen. It's because I'm trading CAD Swiss long.
Yeah, CAD Swiss long
is a breakout.
I mean, it's a great trade really because it's paying you, isn't it, to hold it? And if you got a decent price, why wouldn't you hold on to this? But I still see one more dip potentially for all the currencies against the Swissy. Yeah,
we'll see. I suppose I'm Euro Swissy short. So
yeah, I like that. We'll see. I think Lewis. I think it is time to give the yen a go. I think it's been time for a while, and it's bitten us though, so we have to be very careful.
And Lewis, no, nothing's changed with me. I still hate dollar yen.
Yeah,
with a passion, with an absolute passion. I cannot work it out.
Tricky one.
That's why, to me, if I stand on my head and look at the chart, and I still can't work it out.
Yeah, it's a real tricky one.
And I asked some really good economic analysts in the past, why does this happen? Why, when the dollar is strong and the yen is weak, potentially, why do we see dollar yen sell off? How does that work?
Yeah, well, do you know what?
And they go, well, blah, 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 make absolutely no sense to me. And I'm no better off. So I just
do you know the interesting thing about it is I think you could probably count in single digits how many times it sells off, but every sell-off is aggressive, which kind of sort of tells us that every sell-off is probably motivated by something outside the currency pair, and more to do with Donald Trump or trade wars or something like that. Because actually, structurally, Japan is in a mess. It is it's terrible, terrible mess. What's going on in Japan? And the price of their currency is so unbelievably cheap. You can't see how they're going to get out of anything really. But debt to GDP, I mean, we're talking 200 plus. And it's you know, I don't know how they fix that stuff.
That's outrageous, isn't it?
Yeah,
Yeah, I don't know either. Should we have a look at this euro dollar 30-minute chart?
sure, let's do it
Okay,
before we close out.
let's do that. If I can find it. Oh, I think the trade's just about gone anyway. But anyway, I'll show you what it was. Now, you'll have to excuse me for a minute while I tidy this up. Actually, this might be good news for some people. This looks like a complete and absolute abstract mess. And the reason it does, you're going to see fractals all over the place here. You're going to see lines that mean absolutely nothing. This is the first version of, well, it's probably the 15,000th version of the programmer's attempt to come up with a trade line finder, a Jeff trade line finder.
Oh, cool.
And I've just adjusted all of these settings to actually find them, because they're finding the wrong ones. They're finding the wrong fractals, but we'll work that out. I'll have to change the, I don't know how to get rid of that, frankly. How do I do that? Go to list, indicators list. Where's that? In here somewhere. There. Indicators list, trade lines, delete. Beautiful. I'll leave the fractals there. That might help some people find trade lines. What I was looking at here, and up until the last few minutes, we had this scenario. And I'll close my dialog box. We had that scenario sitting upon us. And if in the next 8 minutes we actually get a bullish bar out of this, maybe up here, so even if it came back to the trade line, that would be perfect. There is an entry short underneath that bar with a stop loss above that bar, or maybe even above that high. I'll put those parameters in for you, just in case it happens. So there's your stop loss. There's your entry. And that's the daily pivot sitting right there. Why did I put the stop loss there? No, I'm going to be bolder than that. I'm going to put the stop loss above the bar, wherever it may be. The high, I mean. So that gives us not much in it, 7 pips. A little bit better than 1-to-1. Just 1-to-1, first profit. Target, get yourself safe there. In fact, move your stop to entry, take half off, stop to entry. And you can use probably DS1 at about 4.5, 3.5 to 1, if you don't want to take any profit off the table. So stops to entry there, 3.5 to 1 at DS1, take your profit. That's euro dollar. That could work out, Ash. We're not sure yet.
Cool.
We've got about 5 minutes to go. We'll see where that candle finishes.
Great stuff, mate.
Lewis, H4 still a nice short setup on euro. H4. Let's have a look at H4. Oh, you like trading these big bars here, these big seller bars. That closes in what, an hour and 4 minutes, hour and 5 minutes. Is that what you're looking at, Lewis? Trading that bar? It is a reversal bar, key reversal bar, after a rally off the top, lower high. Yep, like it. I'm hoping to catch it on 30 minutes. We'll see. What else you got, Ash? Anything? I haven't got anything else. What about
No,
you?
mate, no. I'm zoned in. I'm zoned in on the pound, to be honest.
Right. Okay.
I haven't done the same sort of analysis yet on the CAD, but I'll be doing that sort of in the next few hours. So I might even have that to look at as well. But the pound is the one that I'm really kind of I'm pinpointing. And as I
Mm.
say, I think, after chatting with you, I think it's probably I've probably settled on pound yen actually, sorry, pound kiwi short. But I do also like the pound Swissy as a potential, but it's quite good. I'm glad we had the chat, mate, because I had the pound in mind, but I couldn't decide what I was going to try and use it against. But I think I've got a clearer plan now.
Yeah, look, I'm also glad we had a chat, as I always am every week. And the reason is also very much about the pound. But there's that yen chart I wanted you to see. So,
Yeah.
I've been struggling to find a technical reason why this can
Mm.
rally. That's the only thing I can find. Not a higher high, but a potential higher low sitting right there now.
Yes.
But the pound, because I thought the pound could get to here, right?
Mm.
Because it's above resistance. And that now gives me a perfect way to look at it. There's the target, or there's the sell order right there.
Yeah. Yeah.
Like it.
Yeah. That is good.
All right, mate. I think we'll call it quits then.
Great stuff.
Guys, with that euro, I'll give you where I won't take the order. If I can find a bloody new broker. I won't take the order if this has got a red body, that's for sure. How long have we got to go? 3 minutes. Yeah, I'd like to see it close as a green body. It closes a oh geez, look at the level is that. That's pretty dangerous, I've got to say. But I'll still take the trade. If it's a green body, any green body, I'll take the trade. Under here, stops to entry there, target there. Righto, that's me.
Sounds good.
Have a good week, mate.
You too, buddy, and everybody else in the room. Thanks for joining us as always, and have a great week. And let's hope on this pound and see if we can grab it.
Pound the pound. Have a good week ahead, everyone. Thanks for being our trading buddies, and bye bye for now. See ya. Bye.